What is going on, investors? Hopefully, you guys had a wonderful day out there. It is time to talk about Facebook Incorporated, ticker symbol FB. The company just reported their Q3 earnings yesterday. Now, we are joining you at about 7 o'clock a.m. over here in California. Unfortunately, I was not able to get this video up yesterday. I had a travel day, but it has given us time to digest the Q3 earnings over at Facebook. We also got to take a look at the conference call as well. Listen to that. And then we also have had extra time to kind of digest these numbers, which have come in over at Facebook for the Q3. The last thing that we're going to do on today's video is look at this from a technical perspective. I'm seeing right now the stock is down by 1.75%. It's been up, it's been down, it's been going sideways. We'll talk about this from a technical perspective over at Facebook. Now, first thing is first, let's take a broad view of Facebook, okay? So we can kind of just take a step back from all the challenges that the company has been facing over the last few weeks and months. Take a broad step back. Year to date, the stock's up 20%. Over the last year, up 15%. One thing that I do want to highlight is this company has only, and I say only, a forward PE of 23.3. And the reason why I say it's only that high is because the company just came out with Q3 numbers that were somewhat disappointing, okay? The revenues came in at $29 billion, which I'll show you here more in depth in here a second. Here's our $29 billion worth of revenue. Last year on a quarterly basis, we were sitting at 21. Talk about that more here in a second. That is up 35% year over year, but it's about $500 million short of the consensus. Look, $500 million on $29 billion worth of revenue is essentially a rounding error. So I want you to keep that in mind, that in the shorter view, okay, say you're hard of seeing and you take off your glasses, you can't really see anything. Well, that's kind of the short-sighted views. Put on your glasses, you can start seeing well into the future, and we can do that today when we look at Facebook. So I bring that context up in this valuation context that we're only trading at a 23 times PE. We're growing at a 35% in a quarter that it faced some challenges in the online advertising market when it relates to the iOS update that Apple released. Look, I tell you what, Facebook keeps going down or the stock trades sideways for a while, you're getting this stock at an incredibly great, incredibly cheap valuation, especially when you compare this to the overall market. So the Q3 came in and they missed on that revenue like we talked about. They guided lower amid the Apple changes, but the shares ticked up. This was in the after hours. We're seeing the follow through, like I said, on the following day, which I'm recording this in the morning. We're down about 1.75%, at least at the time that we're recording right now. Let's talk about Q4 guidance first. So the Q4 guidance, which is the upcoming quarter, and in fact, the all-important quarter for pretty much all online advertising, okay? You've got Christmas, you've got holidays, you've got a lot of gift giving, you've got a lot of travel in Q4, you got a lot of things going on in Q4. It's all-important advertising quarter, and Facebook's expecting their revenues to come between $31.5 billion to $34 billion. That's light of consensus. The consensus on the street was for $34.8 billion. So on the high end of their guidance, they're coming under that by about $800 million. But remember that when companies give guidance, they're typically a little bit conservative, and that if Facebook comes in over that $34 billion, maybe they come in at $35 billion, they're going to be able to put out a press release, and the analysts are going to say, wow, they guided down in Q3 and then they just blew it out of the park in Q4. It could be that Facebook is setting up for that. Now, the reason why they're pulling back guidance is this iOS 14. So this is the first quarter where pretty much the vast majority of Apple users have downloaded this update, and it made some changes. So it used to be when you had an iOS device, and pretty much any mobile cell phone, is when you had the Facebook app downloaded on your phone, Facebook, along with other advertisers, were able to look into your web history. So that they might see that I have been to a seekingalpha.com. I have been interested in investing. I've been interested in maybe watches or maybe cars or maybe certain electronic devices that I've been shopping for, or maybe Lego sets for myself. sons and my kids. So what Facebook was able to do is see all the websites and interests that I've had off of Facebook, okay? I didn't have to actively share any of this information to Facebook. Facebook got access to this information through just the simple iOS software. And so Facebook's been able to serve me advertising and serve me up things that they think I'd be interested in. They also serve me, maybe I viewed a specific watch on a specific website. Well, Facebook, if that advertiser advertised on Facebook, would have access to that information and serve me a very relevant ad, maybe that exact watch up in an ad. I'm sure many of you have seen this type of thing when you've been surfing the web. Well, iOS 14 closed a lot of those loops, okay, unless you in fact opted in. But the way the text bubble comes up on your iOS is, for the most part, the vast majority of users are not opting into this, and it's not allowing Facebook to serve as relevant ads. Relevant ads get clicked on more ads that get clicked on and viewed and interacted with, obviously the more money that Facebook makes as well. Now, also think about this from the advertiser perspective. Think about it. I'm like a watchmaker. I want to advertise to guys that like watches and girls that like watches. Well, I'm going to come to Facebook because they had all that information and the ability for me to serve that ad. Well, now Facebook doesn't necessarily have that ability anymore. And so me as an advertiser, maybe I got to pull back on my spending. Maybe I got to reassess some of the campaigns that I had. This is all going on in the online advertising world. And I say this from experience. I spend lots of money. In fact, the number one business, and the reason why the investor channel is sponsor free, ad free for the most part, outside of what we see here on Google. And I don't have any courses. I don't have anything to sell you, mainly because my online advertising business is extraordinarily successful. So it allows us to analyze this company because I know a lot what's going on over at Facebook. Apple privacy effects. Zuckerberg pushes back on Flack. This has to do with the Facebook conference call, which I had a chance to listen to. And look, there's been lots of news over the last few weeks coming from multiple news organizations. You had testimony in front of Congress. It was all coordinated, okay? It was all coordinated amongst the different news organizations. I believe the testimony in front of Congress was also coordinated as well, just to kind of take your attention away from other things that are going on in Washington, or that should be going on in Washington, quite frankly. And so I think it's just a big cloud of smoke. The cloud of smoke will eventually dissipate and clear away. Facebook's always going to be controversial. There's always going to be people that don't like Facebook or think they should be doing something that they aren't. Look, those things are always going to be happening over at Facebook. But I think the most important thing that they talked about was that the largest factor in terms of Q3 headwinds, and this is revenue, the chief financial officer said was those changes to the Apple iOS privacy. It does not allow Facebook to track you, first of all, to serve relevant ads. It also makes it more difficult to show the conversion of those ads to advertisers. So think about it. I'm serving an ad just like we have on this website, and I click on this ad. Well, Apple's iOS makes it a little bit more difficult to kind of track the clicks, the effectiveness, and the conversion of those ads. Facebook, along with all online advertising websites, are dealing with this as we go forward. Now, the other thing that I thought was interesting is that Facebook is doing this, a pretty massive investment, quite frankly, into new AI. They're talking about this metaverse, okay? And so it's basically the next generation of social media at Facebook. So they're talking about how we're going to have this virtual world that we might go to a concert, but we're going to go to it virtually, and we might have our Oculus headset on, and we might have an avatar, but we still might be able to transact at this concert. We go there, we might be able to buy a t-shirt at this virtual event, those types of things. Well, I thought it was interesting that the company is looking to separate the financials of this. They're going to call it Facebook Reality Labs. So they're actually going to separate those costs and those financials away from Facebook, similar to how Google has on their financials. They have something called, quote, other bets. So they basically separate out companies not related to online advertising. And so Facebook is going to do the same thing. So we can kind of keep a tabs on those expenses and how Facebook is investing in things like virtual reality, augmented reality, and artificial intelligence. Now, moving on to Facebook's Q3 earnings. Gosh, you got to love these. I tell you what, even amongst all the challenges that Facebook had, these still look really good. So we've got our revenue coming in here. We talked about how this was up 35% year over year on a quarterly basis. So you went from $21.5 billion up to this $29 billion. You see for the last 9 months, just it's a glorious picture. You went from about $57.8 billion up to this $84 billion. Now, what we absolutely love about Facebook is, look, they're having a somewhat down quarter, okay? And they're running into some challenges with this iOS, but the business model is so clean and apps so pure and prints so much money that you can have some down quarters and it doesn't matter. This is why we invest the vast majority of our portfolio in these types of stocks. Gold medal winning stocks. This is the perfect example of a company that missed on their revenue. They missed on their guidance and the stock is pulling back. And quite frankly, it's off quite a bit from the all-time highs that we made just a few weeks ago at about $385 per share. It's off quite a bit, okay? It's down to $323 per share. But could we bring up a stock chart of Snapchat? We've got other companies that we could point to that are off way more than this because they don't have the cost structure that Facebook has. Take a look at cost of revenue coming in at $5.7 billion. It was at just $4.1 billion or $4.2 billion. Research and development coming in at 6.3. That's up from 4.7. Marketing and sales came in at 3.5. It was at 2.7. And then we got general administrative coming in at 2.9. It was at about 1.8. All things being considered, our total costs and expenses went from 13.4 up to this 18.5. So that's about $5 billion more. But again, remember that we grew this by $8 billion up here, just south of $8 billion. So you guessed it, our income from operations went from $8 billion up to $10.4 billion. That is $2.4 billion more on the operating income side of the business. And you see here, look at for the last 9 months, we went from 19 to 34. I tell you what, if they did not make those changes, those iOS changes over at Apple, this company would be absolutely sprinting even higher than it is. So take those challenges, which look, I think hurt competitors more than it hurts a Facebook. You look at the results over at Snapchat, and we'll get the window into companies like Pinterest and other online advertising companies. Those companies are going to be hurt way more than a Facebook, and we printed a ton more money to our operating side. Look, revenues went up by 35% and our income from operations, that's a cool increase as well. We love what we're seeing actually over at Facebook, quite frankly. Things are looking good from the operating side. Could they be better? Absolutely. Have we come into some headwinds, some challenges? Absolutely. But with challenges comes opportunity. When companies are challenged, an industry is challenged, who do you think always comes out on top? Okay, think about it just like you do with sports. Okay, in the National Football League, when there's some challenges, what player would you bet on that would overcome those challenges? I think we'd bet on somebody like a Tom Brady because he's done it time and time again. And I think Facebook, in terms of social media and online advertising, could be the Tom Brady of the group, and I would expect this stock to recover very much. Now, on the balance sheet, we've got a boatload of cash, over $50 billion. And in fact, on the conference call, in the guidance, they bumped up their share back program again up to that $50 billion mark. So they've just got a ton of money sitting on the balance sheet. They cannot do an acquisition. We talk about this all the time on our FANG Stock recap show when we're talking about Facebook and all the FANG stocks, is they can't do any major acquisitions. They couldn't go buy a Pinterest. They couldn't buy Snapchat. I mean, nobody would let them do that, okay? And so they have got all this cash. This is why they're investing it into things like AI, this metaverse thing. Some people might say, oh, well, that's a distraction for Facebook. They shouldn't invest in those types of things. Look, they can't do anything else with the money that they have. They literally cannot do anything else with this cash. They have $50 billion. They could pay a dividend. I actually think they should at Facebook. I think they should pay a dividend. Not a big one, but I think they should pay a dividend. They are doing a buyback, which some people would argue they like better. But look, we could do a buyback and a dividend. That's what Apple's been doing for many, many years. Here's the other thing to keep in mind. Here's our total liabilities. This is all our lease obligations. This is all our accounts payables. Every liability at Facebook's coming in at $36 billion. They have that in cash and more. So this is a company that is just absolutely flush with cash, has almost no liabilities. They don't have to use this cash. They can have it sitting here, but cash is trash, guys. And so I do like that they're reinvesting it in the business in the ways they possibly can. If there wasn't any regulatory overhang on these stocks, I think they'd be doing all kinds of acquisitions. They'd be buying all kinds of companies. Facebook would have probably been in the market to try to buy TikTok last year when it had that political pressure to do so. Now, from a cash flow perspective, things are looking all good, baby. Look, for the last 3 months, we pulled down this net income, $9.1 billion. We were sitting at $7.8. That's on a quarterly basis. For the 9 months ended, we pulled down this $29 billion, and we got $17.9 billion in terms of the previous year. We add back some things. This is not necessarily as important as some companies, but we've got our net cash provided by our operating activities coming in at $14 billion. We were at just 9.8 in the previous period. Now you take a look at investing activities. So we talk about how they don't have a lot of use for their cash. Take a look at the net cash used in investing activities. Just $300 million in the most recent quarter. They just don't have a lot of uses. So what are they doing? Here's the repurchase of common stock right here at $13 billion. We've got some tax paid right here, okay? They're paying taxes and they're buying back their stock. That's really all what they're doing with this massive amount of cash and the massive amount of cash flow that they generate on a quarterly basis. Now, moving over from a technical perspective over at Facebook, look, this stock was in sideways consolidation. If you follow the FANG stock recap show, we talked about all of FANG was sideways consolidating, and then we were looking for them to break above all-time highs. We did that a few weeks ago or a few months ago over at Facebook, and this thing went on a monster run, okay? Went from $300 per share up to $385. We're talking in the matter of about 2 months, okay? This stock just bolted on a ton of gains, and then what's happened since then is it's pulled back, okay? And we are now in a pretty well-defined downtrend on this one, quite frankly, okay? We've got a high, we've got lower highs. It looked like we were almost reverse trend here, but it came gap down, and we are now stuck in between a range. I'm going to take this downtrend line here. I think you can understand what's going on. We're stuck in a range between, right now, 315, 330 on this one. So here's what you're looking for with Facebook. I'm already overweight Facebook. I got a ton of shares. I got shares in my wife's directed account. My kids have Facebook shares. I got a lot of this stock. So, it's kind of like having a lot of pairs of sneakers, okay? You got a bunch of pairs of sneakers. You're not really looking to go out there and pay full price. But if Nike runs a 40% off, 30% off sale on some of your favorite pairs, well, sure, you're going to probably hitch up and buy another couple pairs. Now, if you're very light Facebook, you don't have any exposure to online advertising. You don't have any exposure to Google. You don't have any exposure to Facebook. And I would start there, quite frankly. If you forget Pinterest, forget Snapchat, forget any of these other smaller online advertising, especially Twitter as well. Forget those companies and get a full allocation in Facebook and Google. So this analysis kind of depends on where you're at with this one. Right now, you're sitting between 315, 320. I don't mind here. Okay, because we're only about $20 above where I think we've got a hard level of support here. We're going to have a hard level of support on Facebook. I'm going to zoom this out a little bit so you can see this a little bit better. But this $300 level was where we peaked out last year, and the stock constantly bumped its head on this $300 level, and then it broke above it, and then hesitated for a second before launching up to 380. Okay, that is a hard level of support. That's personally where I'm waiting for this one. I'm still not convinced that we're not going to give back that whole leg of growth that we saw earlier this year, that where when we broke above 300, we busted up to 380. And now I'm thinking this downtrend looks like it's intact. This stock looks like it wants to go lower, in my opinion. The first place where I'd even think about this one is probably closer to 320, 310. It's not that far from where we're at. 315, 320, excuse me. Now, lower than that. Now, if you break 315, I think you got an extraordinarily high probability of coming back down here to 300. And I say 300, it could be 305. People can step in on these mega cap stocks that are very, very well followed from a technical perspective, from an algorithm perspective. They're such a huge part of the market that investors sometimes, oftentimes, step in early on this one, or that the reversal is so quick, you literally had a day or hours to pick it up down here at 300. So what I would say is anything, if you're already overweight Facebook like I am, you want to get some more shares, but you want to get it on sale, anything south of 315, in my opinion, is a good price on this one. So you still got about $7 or $8 left on this one. And you might say, well, should I wait? Should I wait? Well, we're on a downtrend here, and we're not reversing. We are showing signs of kind of flattening out here, okay? It looks like there's some hard resistance at the 320 under this one. And if we start flattening out, we're looking for a break above 329 on this one, okay? You get about 329. It's not the all clear sign. It doesn't mean that we're back in an uptrend or this downtrend is reversed. The reversal would happen up here closer to $340 per share. That would take out these previous highs, and it would create kind of a V formation, or the illusion, or the reality that we've actually broken above our previous lows, and this stock is back on an uptrend. So you're looking for a break above 340 if you're very bullish this stock, and if you're looking to buy this stock, you're looking for a break below 315. You break below 315, I think you got high probability of coming down to at least 305. That, in my opinion, would be a great spot to buy this stock. The other thing that I want to point out to you, and from a technical perspective is extraordinarily important, and we probably don't emphasize it here on the show enough, is I want to zoom this in a little bit more. I want to show you the volume. So these candlesticks down here where I'm circling, look at the volume is actually getting, because look where the volume was back here. Okay, the volume was really low, or relatively low back here. Now we're seeing a pickup in volume of Facebook. So it's showing me that people are stepping in at these prices. Okay, so really, I think personally, especially if you're underweight Facebook, underweight online advertising, anything south of 330 price on this one, and we're sitting at 323 at the current time. It's actually not a bad price for Facebook, especially when you factor in their growth rate, the factor in that you're not paying a hefty price for the stock right now, and you got plenty of room to grow with this one. And I tell you what, despite all the challenges with iOS 14, the company will overcome and will create new products, and they will emerge as a champion in the field, while other competitors like Twitter and Snapchat and Pinterest will likely struggle because Facebook just has the users and the ability to scale up. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.